Hi, this is Ron Janish, and this video is about the new Andrews Pitchfork indicator. Going to show you the historical tests that have been done way back to 2007. This is all unoptimized. So if someone wants to add a median line, a reaction line, or other indicators to it, that's fine. Uh, this is all unoptimized. So what happens is during the day, we wind up getting this information here, this value. One, it's usually a 1, a 2, a 3, sometimes a 4. And if the value is above the price, so it's a +3, let's say, then that would be bearish. And if the value is a -3, which is below the price, then that would be bullish. Now, they really don't come in to me as minus or plus. They just come in as high 3 or low 3 kind of thing. Anyway, but what happened is today, for example, when prices were about over here, we were able to publish that this was a low 1, and we put it up on the charts here. And letting people know that if the last number is an early number like it was this morning, it is subject to change prior to the close of trading. And lo and behold, at the close of trading, we found we had a low 1 and a high 1. Very unusual to get that. And also remember that numbers are cumulative, and the more numbers, or the higher the number in a short period of time, the more power the move has. For example, a 3 is a very high number compared to a 1. It's 300%. And this is a very powerful number, signifying that 3 weeks or so from now, prices are going to be a lot higher. Here, you effectively have a 4 because you have 1, 2, 3, 4 all together if you accumulate them. And boom, nice 4-week move. And so here you have 1, 1, 3. And so that would signify probably something that'll go close to 5 weeks down, perhaps more, depending upon what happens after that. So let's take a look and see what happened under different conditions. What you need to know is this is not optimized, so you can add whatever you want to it. Hasn't been optimized at all. This is the raw data. We're going to look at what happens in a market that's really choppy, and going to look at what happens in a market that is pretty much straight down. Okay, let's take a look. So we'll take a look at some historical data. First, we'll look at, there we go. We'll look at, this was in 2010, and we can see here, the ones are at near the highs, suggesting down we go some more. And then suddenly things turn down here, and you get a 3 suggesting, hey, you're going to have a while for an up move. And then you get a 2 saying, you're going to go down a little. But and then the 1s continue, and these are ones that are together, and that's really kind of good. So they go up, 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 and you get a 1 here, and you get a low down here, and a 3. Boom, a 3. What does the market do? Boom, down we go. So you get a little 2, and then she goes down some more. Remember, 3 is looking for 3 or more weeks down, typically. And so once again, here you have a 3, and here you have another 3. But sure enough, several weeks later, prices are lower. And as prices make this low here, what do you get when these cumulative 5s? That's just phenomenal. 1, 3, 1. That's rare. So right here, you get a nice strong move to the upside, albeit takes a long time. Okay, along the way you get a 2 plus a 1, and then you get up here and you have a 1, 4, and a 2, saying, hey, this guy's going down. And sure enough, it does go down. And along the way you get a high 3, a high 1, a high 2. Remember, this is choppy data, and this is very tough to trade for many people. And so things go down nicely, and then they break to the upside, come down a little. What do you get? You get a 1, 4, 1. Wow, that's a 6 in total. It's up we go time, big time. And so the nice long uptrend continues. Okay, let's take a look and see what happened back in GW days, when the market, right around the time the market was about to make its high. Let's take a look here. Okay, here we go. See, here we get we get lows and high ones, and the market's kind of choppy and just doing its little thing. And all of a sudden here you get a 1, 2, 1, and then you get a boom. Another one of these breaks to the downside. Okay, and so you get a 2 and another 2 here, and it's up we go, and you get a little 1, a little resistance here, and you get a 1, 1, a 2, support, 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 and you get a 1, 2, and you get 1, 2, just nice choppiness, if you like that kind of thing. And then all of a sudden you get some more of this stuff, goes down, goes up, the 1 and the 1, 1 and 1, 1 together. So saying, we go for a while. 2 had that nice down move, and then up we go. And all of a sudden, watch this though. Right here, you have 3 together, and here you have 2 together, and then over here you have 3 together, and here you have 3 together. And so it's downtime. Downtime very nicely. Now, this is the first cumulative 3 you have. Here's the second cumulative 3, 1, 1, 1. Prices go down, but they go a little higher. So what do you get? You get another 3 over here, a blatant 3. And it's down we go time. Okay, so you had your blatant 3, and it's down we go time. Do we get another 3? Now just high 2s, high 1s, bunch of 1s, 2s, and here's another 3. Where did this go? This was right over here. Okay, so suggesting, hey, 3 more weeks of down or more, boom, get a nice move from where? Ooh, 1,000 down to 800. That's a nice, below 800, cheapers. Went to about under 750. Woof. Here we get some more high 1s, 1, 2, still suggesting more downward movement. And then after it goes down, starts making the low. This was the low. And here's a 1, here's a 1, here's a 1. Now these are probably enough to get you out. And just kind of sit aside and wait to see what's going on. Because here's a 1, 2, and then a 2, and that's a total of 5. So watch out. It's away we go time. Okay, and that's the study of the longer period of time. Okay, so you've seen it operate under different conditions. You can learn more about this indicator by going to andrewscourse.com, products. What you do is you join the regular course, the Andrews Advanced course, and after that you can quickly join the expanded course if you like. And this is where we get into just all the incredible stuff that Andrews taught. And you get this massive thing of course material, not only videos but in writing. From nearly all of it is from Dr. Andrews. It was just absolutely amazing. So we do that, and then you'll wind up being in a private group. And in the private discussion group, we cover this indicator on a daily basis. So this way, we do the analysis for you. You know what the numbers are. Sometimes we know the numbers very early in the morning, sometimes not till later in the day. Let's say you're a college student, not ready for that because you've got tons of student loans coming up and all those other things. No problem. Join the discussion group, the email group, right down here, the Precision Trader discussion group. Okay, and make sure you join the thing here to get an additional once in a while email from us, right, telling you about different things that are going on. So that's how it's done. And thanks for stopping by and seeing the long-term study. Bye.